I have the privilege and responsibility of telling you about the information that is contained in the 2016 Silicon Valley Index. Before we plunge into this information, I want you to know that in addition to the book that you hold in your hands, the index lives on a dynamic website, and we actually intend for you to use the material there. It's far more valuable and interactive and functional if you go to the website, because at the website, it's possible for you to mine this data. You can, for example, go to the dashboard, and then you can type in what is of interest to you, and you can pull up a chart that you find compelling. Then it's possible for you to actually work with this chart. You can pull up related indicators. You can go to the source material. You can look up all of the definitions. You can disaggregate the data, and you can download the chart and make it a part of whatever presentation you're working on. We intend, in other words, for all of this material to be in your hands. We want it in the hands of the community. We make it, of course, freely available, and we want you using it not only today, but we want you using it throughout the year. So that's how the index works. Now let's talk about what the index is telling us about Silicon Valley today, as of this calendar year. Well, ladies and gentlemen, you are looking at the world's most prodigious regional economy. This is a true statement. There's actually no other region like this, and we've looked across the globe. This region has extraordinary properties. We don't always realize it because we just live here, and so sometimes it's like explaining water to a fish. But the fact is, Silicon Valley is not an ordinary region, it is an extraordinary region. And today we'll be talking about our contours and our features. But in this place that you're looking at on the map, you're looking at one of the most highly productive economies, one of the most export-oriented, one that's commanding national and international markets. You're looking at a footprint that contains the world's most highly educated workforce. 80% of our population has their high school diploma, 60% has a college degree, 40% have multiple college degrees, including MAs and PhDs. That's the kind of population we have. It's the most internationalized population in the world. 51% of our population is speaking a language other than English exclusively in their home. That's the kind of place that we live. In our workforce, fully 2/3 of our engineers and our scientists are Indian or Chinese. That's the kind of population that we have. So this is remarkable. Now, very often we're asked, what is the footprint? What is Silicon Valley? How do you define it? This is an important question. Of course, one way to answer that question is that we don't know how to define it. It's not really a place. Silicon Valley isn't a place. You can't point to it on a map. It doesn't have an overarching governance structure. Nobody knows who's in. Nobody knows who's out. It's really a state of mind. We know this, right? Silicon Valley is a brand name. It was coined by a journalist in the 1970s, and it captures this phenomenon. And the phenomenon is an economy that is based on innovation and entrepreneurship. That's what it's describing. Well, when it comes down to actually measuring things and counting and figuring out how we're doing, we finally have to draw dotted lines on the map. And so just for your interest, we want you to know that we think of Silicon Valley as the entire peninsula, all of San Mateo County, all of Santa Clara County. It takes in part of Alameda County, certainly includes Fremont, Newark, and Union City, and then it even includes Scotts Valley on the other side of the Santa Cruz Mountains. That's how we're defining it. Then there's the big question. People want to know if San Francisco is a part of Silicon Valley. Of course, we'll leave that as a conversation item. This is a very interesting debate, but we'd like you to know that at Joint Venture and at our Institute for Regional Studies, we think that San Francisco is, of course, a part of this phenomenon that we're describing. The phenomenon began in the south part of the bay. Its footprint has grown and spread over the years and the decades up the peninsula. It's working its way around the other side of the bay into Oakland, which, ladies and gentlemen, Oakland is up and coming. It is going to be a tech center. It's going to be a haven for entrepreneurs. It's already happening. As Uber, Lyft are locating there, Pandora located there. And so this footprint is clearly spreading. And of course, one of the biggest stories is the emergence of San Francisco as a technology hub, as a software, media, internet hub. Its growth has been staggering, and so we'll be talking about that. One way to look at it is that we have a regional economy that has two engines. This is a twin-engine aircraft, and both of the engines are firing, and they're powerful. That's one way to look at it. Another way to look at it is that we're one economy, and now we have reasons to be integrating more than we ever have. So that's how we'll talk about it. Today, we'll be talking about San Francisco on some of the indicators. Some of the indicators, we talk about Silicon Valley. And we're always very clear in the reporting on the websites and in the booklet that you hold how we're treating San Francisco in these indicators. Well, the question, how are we doing? What kind of a year did we just have? Well, let's delve in. Let me tell you what happened. The first thing that people like to know is is the economy growing? Are we adding new jobs? Well, ladies and gentlemen, in calendar year 2015, we added 64,000 new jobs in Silicon Valley, as we define it, those 39 cities. 64,000 new jobs. That's the biggest number we've ever recorded, with one exception, that was the year 2000. When you add San Francisco into the mix, that's another 30,000 jobs. When you add the rest of the East Bay, including Oakland, that's another 26,000 jobs. When you add all 9 Bay Area counties that ring the Bay, that's another 18,000 jobs. Your grand total, ladies and gentlemen, is 129,223 jobs. That's what happened in the Bay Area over the last calendar year. That's a 3.6% growth rate. That's just heads above any other region in the nation. Silicon Valley's growth rate, the way we define it, is 4.3%. That's a breakneck pace. We've never seen job creation like that in our history. This is what it looks like over a 5-year period. You can see that there was that period when we hit the recession, and yes, that was a trough. But what's so interesting is that Silicon Valley was the last economy to succumb to the epic recession. We were the first economy to emerge from it. And then we have now mounted 5 consecutive years of positive job growth, each year as impressive or even more impressive than the last. Now, you might wonder how it stacks up against the year 2000, the dot-com craze. You know, we're asked this question all the time, and people continue to measure our performance against that crazy, extraordinary year. It's sort of like we need therapy. It's like the region needs a little therapy to get over that 2000 thing. What we keep telling people is that the dot-com craze was not real. It simply wasn't real. And you can see, it was a spike that lasted less than a year, and then it all came crashing down. And so as you look at the chart, you can see it was a tremendous crash, and we were a contracting economy for a solid 4 years until we were growth positive. And then it was only a few years of positive growth until we hit the epic recession. Now, ladies and gentlemen, we have mounted 5 consecutive years of remarkable expansion. It's been steady, it's been incremental. You might wonder what's driving it. Well, it's clearly tech. Tech is a big driver. We know that. We live in a technology economy. And so the major categories driving this are what we call innovation and information products and services. And that has accounted for 37% of the growth that I'm describing today. So if you want to know what's driving it, it's the internet, it's the cloud, it's cloud storage, it is our mobile devices, it's the applications that support those mobile devices. It's IT infrastructure, it's certainly software, it's certainly hardware, computer hardware. This is what's driving this growth. It accounts for about 37% of the new jobs in Silicon Valley. Now, a lot of people think that tech jobs are the majority of our workforce. And you would think that because it's Silicon Valley and we're this technology economy. It's actually not the case. 25% of our workforce is in what we classify as tech jobs. If you're curious, that's what it is. A quarter of our workforce is doing that. By far more of our workforce is doing the kinds of things you would see in any community. And we call this community infrastructure and services. This is healthcare, this is retail, this is education, this is construction. And this category is also growing. It's growing at a rapid pace. So you could say that it's driven by the tech economy, and the rippling effect is finding its way into all of these other sectors, and that's clearly happening in Silicon Valley, the entire peninsula into San Francisco. So that's where we're growing. We're seeing the growth in tech. We're seeing it in our community infrastructure. It's also clear that we're growing in this category that we call business infrastructure and services. Let's drill down just a little bit. you might be interested to know which sectors are adding the most jobs. Well, here we lay it out for you in terms of the raw number of jobs that were created. So the big growth area was computer hardware design and manufacturing. That makes sense. We're a tech economy. Also, internet and information services. These are adding thousands upon thousands of jobs. But then our third biggest growth area is construction. Maybe that doesn't surprise you. You see it all around you. Cranes and huge building projects. We're adding all kinds of square footage to our region. So that was the next big driver. It's also interesting that in the year 2015, we saw tremendous growth in this category we call accommodation and food services. That's actually new for our valley. We've actually added all kinds of new hotels, and we've approved more hotels for development. And the catering and the restaurants and the retail operations that support that sector. So that's been an interesting growth area. Healthcare is also growing in our region. This makes sense as we have population growth, but also an aging population. You might take note of that. So that's how we're growing. If you look at it by the raw numbers, it's also interesting to ask, well, who is experiencing the highest percentage rate of growth? And what does that tell us about our economy? Well, here's a way to look at it by percentages. Isn't this interesting? The sector that grew by the largest percentage was warehousing and storage. We actually haven't seen that sector grow since the year 2000. It's been a long time since we were adding warehouse space in our region, and now it's actually booming. And it's going in places like Fremont, but it's also spread throughout the entire Bay Area. And it's FedEx that's using it. It's Apple is using warehousing space. Furniture companies, electronics distributors. That's what's happening in our region. And then it's also interesting that biotech is experiencing such high growth rates. They're growing at about a rate of 20%. Now, biotech doesn't employ as many people as we think. It's actually a smaller employer, and it's a little more localized. And yet, it's having, last year at least, the most explosive kind of growth. And it's also significant, telling, I think, that more than a third of the IPOs coming out of Silicon Valley last year and the several years before were biotech IPOs. So this is a very active, high-functioning area for our region. Other sectors also growing: instrument manufacturing, internet information services, all of this. So you might be interested to know where we're shrinking, where we're actually experiencing job losses. Well, we report 46 different categories, and last year we only had job losses in 8 of those categories. That's amazing. The year prior we had job losses in 20 of those 46 categories. So 2015 really was an extraordinary year. We're not shrinking by much, but we are shrinking in a few places, and they're telling because it tells you what kind of an economy we're becoming. For example, we don't need as much telecommunications manufacturing equipment as we once did. Semiconductors and the related semiconductor manufacturing equipment is shrinking its footprint in our valley. That's been going on for a long time. There's actually not so much silicon in Silicon Valley anymore. That's an interesting finding of the index. Those functions are going to other parts, distributed around other continents on the globe. Technical management and consulting services. Nonprofits also shrank in the year 2015. Sometimes that seems like a counterintuitive finding. We're, of course, a nonprofit. We spend our time in the nonprofit industry. But what I've learned is that sometimes nonprofits have a harder time during the boom periods, and they have an easier time growing and raising money during the bust periods because the need for them becomes more apparent. That might be part of the dynamic. Anyway, that gives you a sense of some of the sectors that are shrinking. IT repair services is also shrinking a great deal. That's because our equipment, our devices have become disposable. We don't keep them for years and years. We just we use them and then upgrade. That's the kind of valley that we become. Well, ladies and gentlemen, if this is your kind of stuff, then you need to go to Appendix A, and that's where you can look line by line, sector by sector. If you're a wonk or a geek like me, you will love looking at Appendix A and seeing exactly how we're doing across all of these different categorizations. Now, I've just described this booming economy, adding all kinds of jobs and doing it across a wide portfolio of technology industries. It's also manifesting itself in terms of square footage that we're developing. And 2015 was a very big year for development in Silicon Valley. We actually approved 23 million new square feet of development. You're going to see all kinds of development take place over the coming years. More construction projects, cranes are going to be dotting our skyline. This is about to happen. 23 million square feet is a big number. That's the biggest number we've ever seen since 2000. And again, we need therapy to get over 2000. But that was just a spike that wasn't real. And now here we are, numbers that are exceeding any of the previous years, except for 2000. In fact, the 23 million figure is the highest number. That exceeds the previous 5 years combined. That's how much we're going to be developing in Silicon Valley. This chart is showing you that we finished 3 million square feet in Silicon Valley over the last calendar year. Finished. People have moved into those offices. The vacancy rates are at all-time lows. A vacancy rate in Santa Clara County for commercial and office space is 7%. That's as low as it's ever been, except, again, for the year 2000. So again, breaking records. The vacancy rate for R&D space, 2%. And, of course, this is driving the prices up. So the rental rate per square footage is as high as it's ever been. It's now $369 on average. That's what you would pay on average for office space in Santa Clara County, the heart of Silicon Valley. And R&D space, it's $269, if I'm remembering correctly. So that's the sort of thing that's going on in Silicon Valley as this economy expands all around us. Does it translate into a sense of prosperity for our region? We'd like to talk about this. And the simple answer is, well, my goodness, yes, earnings are up. There is something to this notion that Silicon Valley is a place where you can come and pursue a path to prosperity. And if you measure it by income, average annual earnings, you will see that we're actually off the charts. Ladies and gentlemen, this is an extraordinary figure. It actually boggles my mind. So if you take all of the people that are working in Silicon Valley, the money that they earn, you divide it by the number of people who are working, this is the number that you get, $122,000. That's our average annual earnings. Now compare that to the nation, which is $62,000. We're double the national average. Now we have a higher cost of living here, it's true. Nevertheless, that is staggering. It's just extraordinary. And of course, you can see that we're also higher than San Francisco. We're higher than California. So this is what's happening in Silicon Valley. Now, averages are problematic. You know this. We have very high earners in Silicon Valley. And so they skew the average. They send it way up. Silicon Valley has 50 billionaires. And it has tens of thousands of millionaires. That's the kind of community that we live in. And so it's going to drive these average numbers way up, and you can see it. But that's why it's also important to look at other income measures. One would be median income. You might be curious to know that the median income of Silicon Valley residents is in the 40s. It's about $46,000. Now, median, remember, is when half the people make more than that amount and half the people make less than that amount. So that's our breaking point. We think it's a little more telling to talk about household income, and that's what you're looking at in this chart. So our median household income is $98,000. Every household out there making, that's the breaking point, $98,000. Now that stacks up very favorably against California and against the national average. National is $53,000. That's the median income in our nation. I also want to point out that it is 4 consecutive years of growth in income growth. So there is something to this notion that the boats are rising in Silicon Valley as our economy prospers. The people who are making the economy fire are also prospering. Now, we'll also talk in a few moments about the underside of our earnings picture. We'll come back to that. I now want to talk for a moment about the innovation engine itself. You know that the thing that characterizes us more than anything else is the fact that we're innovative. And that people come here to try new things, to invent, to disrupt industries. And that continues to be our hallmark as a regional economy. So in the index, we're always very concerned to find ways to measure that. How do you measure the innovative nature of the economy? Well, one way for certain is to look at patents, the patents that are coming out of our region. And by no accident, one of our keynote speakers today will be the director of the United States Patent and Trademark Office, Michelle Lee. She'll be on our stage later this morning, and she will be fleshing out this story, which is an extraordinary story. Ladies and gentlemen, in the year 2015, we recorded 19,000 patents. 19,000 applications came out of our region. That's the highest number ever recorded. The previous year was 16,000. That had been the highest number ever recorded. Every year, we seem to be generating more intellectual property in this region. Now, you might be interested where they're coming from. What kind of patents are they? Well, they're mostly computers. Computers, data processing, information storage. That's where the work is taking place across our region. And then, in fact, that's the lion's share. About half of them are in that category. Then the rest are spread around other things, interesting things, communications, electricity, heating and cooling, healthcare, chemical and processing technologies. It is striking that it's a diverse portfolio. We're not just a one industry or one sector town. We're doing actually a variety of things across a rich portfolio. Now, it's also interesting to look at patents per capita, and that number for us just continues to grow. We had actually a 37% growth rate in Silicon Valley over the past 3 years in terms of our patents per capita. I think it's also interesting to point out that San Francisco is becoming a generator of patents. So as we talk about its emergence on the Silicon Valley scene, well, this is one way to look at what's happening in San Francisco. They have a smaller absolute number of patents. They're actually a small contributor. It's in the 2000s or so. And yet their growth rate over a period of 3 years has been phenomenal, 94% growth rate. So that's a story to be paying attention to, especially over the coming years. Another key indicator is venture capital. We look at this very carefully. It's important to look at venture capital because we see it as a leading indicator. Venture capital is where people are making bets and what they see as our future and how are they feeling about that future. Well, 2015 was a record-breaking year. I want to put it in context. 2014 was an amazing year. In 2014, we generated close to $20 billion in venture capital in Silicon Valley and San Francisco, and it was evenly split. San Francisco actually had a little more venture capital than Silicon Valley had in the year 2014. We thought that was an amazing year. Well, in 2015, we exceeded it. We actually got up to $24 billion in venture capital. And San Francisco, again, exceeded Silicon Valley's total. San Francisco had about $13 billion in venture capital. Interesting, in San Francisco, most of it is accounted for by just a handful of blockbuster deals. And you know what they were. They were Uber, they were Lyft, they were Airbnb, and a financial services company that does peer-to-peer lending. The name escapes me, but also very telling about the sharing economy. So that's your San Francisco picture, and then you add to it Silicon Valley, and we're looking at $24 billion of venture capital generated in our region. Now, again, as we compare to the year 2000, 2000 is the first year in this chart, and it was, an amazing year, but we learned very quickly that wasn't real. And the venture capital industry felt chastened by that. Now you see that the numbers that we just reported are the highest we have ever had at any time except for the year 2000. And so we're experiencing some pretty remarkable growth in that sector. By the way, we account now for 72% of the nation's venture capital. 72% of California's venture capital, and we account for 41% of the nation's venture capital. So 41% of all venture money is generated here and spent on Silicon Valley companies right here. And never forget, the venture capital industry was invented in Silicon Valley. It's one of our innovations. It did not come out of the financial sector. It came out of the technology sector, and it happened right here on Sand Hill Road. Now, you might be interested to know where the venture capital is going, because that's a very telling indicator. Well, it's going into software. That's where our venture capitalists are investing. And so people look at that and they think, okay, that's interesting. There are people who are looking at this and saying that's actually a troubling sign. They're saying, really what we've done in Silicon Valley has become completely infatuated with mobile devices and the apps that support them. And so our biggest priority is to make sure that there's some app that gets your lunch delivered to you in 10 minutes or less, right? That's one way to look at this picture. And you could say that's alarming, that we're not actually putting enough heft and engine power behind other things like biotechnology or a smart grid or renewable energy or clean technology and those kinds of things. So this is something that we leave for you to discuss in your own conversations. It is, I think, an important issue. It's interesting that besides software, if you look at the rest of the portfolio, it's diverse. And it's spread fairly evenly over a number of things: networking equipment, telecommunications, semiconductors, media, entertainment, medical devices is an important category. So that's what our VC picture looks like. Now, I just want to acknowledge that there's a gorilla in the room, and we should spend a few minutes talking about it. Now, I don't actually think it's a gorilla. I actually think it's more like an orangutan. I think that's what we're talking about. Nevertheless, we need to be very frank and clear that there was a downturn in the fourth quarter. And so just a few comments about the fourth quarter downturn. Yes, it happened. Yes, it was real. One of the most striking things about it is that even though there was this downturn, and this gives you a picture of it, it was still a record-breaking year. We still exceeded all of our totals, and we only needed 3 quarters to do it. That's pretty remarkable. Nevertheless, the downturn happened, and it's happening for reasons that we can't fully appreciate, and we can't tell you what's going to happen. In fact, I want to pause on this point. Remember, the purpose of the index is only to tell you what happened. That's all we're doing here. We're just reporting the facts. We are just telling you what happened in the last calendar year. It's not a crystal ball. It's not going to tell us what's going to happen, and if this is the beginning of something. We don't know. Nevertheless, we do know that there was some shakeout in the financial markets, and it was actually not a local phenomenon. It's a national phenomenon. It's happening in the United States as well as Silicon Valley, and it's affecting, for example, our IPO market. So let me say a quick word about that. We started out with that IPO engine firing. We were on a pace to exceed our previous years. And then in August, something happened in the stock markets and new valuations and investor concern about China and concerns about the falling price of gas and all of the rest. And suddenly the IPO market didn't look as appealing as it once did. So last year, you saw 23 IPOs come out of Silicon Valley. When we finished this year, 2015, only 16. That's what happened. And we had only a trickle after August. And in January, we had none. It was the first month ever where we had not one single IPO come out of Silicon Valley. So that's something that's happening. This shows you the slowdown between January and August, and then the slowdown between September and December. So clearly something's up. There's skittishness, jittery investors in Wall Street. That's part of it. There's certainly something going on with these so-called unicorns, of which there are only a handful, but nevertheless, unicorns are out there. There's these fears that they have been overvalued, and so they're now turning into unicorpses, is the latest term of art. And so that is clearly happening. So this is the question that is, of course, on everybody's mind. Is this the beginning of the end? Is this the beginning of some kind of a slump? Will we be seeing our fortunes turn around? Well, we don't know the answer to that question. We just don't know. But I can venture a few things, since it is topic A on our conversation list. And so here's a couple of observations. One is there's a different logic to Wall Street than there is to Main Street. Wall Street is looking at a host of things, and I don't pretend to understand the logic of Wall Street. Main Street, meanwhile, continues to fire. The fact is, Silicon Valley's companies continue to be profitable. They are still investing in IT. They have expanding customer bases. They are proven customer bases that have been years in development. They're showing profitability. And so the companies on Main Street are continuing business as they were. And we've documented that throughout every page of the index. It's also very striking that our portfolio is so diverse. And so you could see some contraction in one sector or one category. It might not affect all of the rest of them. We used to be a one-industry town. And that's not the case with Silicon Valley anymore, but we used to be like a semiconductor town or a computer town, and so if there was a downturn in that industry, it brought the entire valley down with it. Today, Silicon Valley is such an amazing portfolio. It includes clean tech, biotech, nanotechnology, IT infrastructure, electric vehicle industry, the electric vehicle infrastructure, and all of those industries. Don't forget mobile devices, apps, software. I mean, it's just a remarkable portfolio. So it's hard to imagine that it would all come tumbling down. We don't see anything in the index that suggests that that might be in the offing. It's also very striking, very telling, that we appear to be moving into some very promising new areas, and we haven't even begun to realize their potential. One would be security and encryption. Another would be the Internet of Things, which is billions and billions of dollars in terms of market opportunity. So that's the best way we can think about this fourth quarter downturn. But let's meet back here in a year's time, and then we'll have some facts at our disposal, and we can talk about whether this fourth quarter really did signal the beginning of something different. Now, we've been spending all of our time talking about our remarkable prosperity and the dynamism of this economic engine. Let's shift gears for a moment and tell you that there are also some perils associated with this kind of prosperity. And so we should talk about those. One is income. It's related to income. The fact is, we're a valley of very high earners, and we're a valley of very low earners. This is our reality. And those two segments are growing. We have some charts that show that. This is a chart that dramatizes it in terms of households in Silicon Valley. So we see that the high-end households, the high-earning households, are actually growing. They're gaining percentage points on an annual basis. And the low-end is also growing. That number of households is also growing. And so we're becoming a bifurcated region, a valley of haves and have-nots. That wasn't our history for decades running. This is a more contemporary development. And we are seeing those mid-range jobs decrease. We're not proliferating them the way that we once did. It's interesting. It seems to be a structural factor at play here, and it's easy to understand. The tech economy used to generate all kinds of mid-range positions because we used to be a support economy. We needed administrators and clerks and archivists and coders and stenographers and receptionists and secretaries, and the whole economy has changed. Those jobs have been permanently outsourced to the last century. That's actually what's going on with those kinds of jobs. And today we're an economy that's constantly minting these high-paying positions for principals that are doing very sophisticated things, and then a supporting economy, the service sector, that it provides the underpinning for it. But we're not generating those middle-class jobs, and we document that in a number of ways in the index, and we recommend those pages to you. So this is something we really have to scratch our heads about. We don't have answers so much as questions at Joint Venture Silicon Valley and our institute. Poverty is also something that we have to grapple with in our region. Many people outside the region are astonished to learn that there is such extensive poverty in Silicon Valley. The good news is that we made progress. Previous year we were at a 9% poverty rate. Now we're at a 8.1%. So it was actually 9.5. So we've gained a point and a half, 1.5 percentage points in our fight against poverty. However, this is poverty as it's defined by the federal government, and it doesn't even take into account the cost of living. And by the way they talk about poverty in the federal government is defined as whether you need assistance to eat. And it's not taking other factors into consideration. So there's also there's another there's another marker that is used by academic social scientists who look at this, and we call this the self-sufficiency standards. And people are astonished to learn that in Silicon Valley, 3 out of 10 people, 30% of our population, is not meeting self-sufficiency standards. This means that they need assistance not only to eat, but to live, to have shelter, right? So that's the kind of population that we are. You saw the high earnings charts, but you also need to have a complete picture. You also need to know that 3 out of 10 people can't get by on their own. That's the kind of valley that we are. Well, in the minutes that I have remaining, I want to tell you this. The incredible growth that I've described is a mixed blessing. It also puts a strain on our region. So let's talk about that. Population of growth, of course, is a real phenomenon. We continue to grow. We do that by in-migration, but we also do it through our birth rate. And by the way, we hit this year 3 million people. Silicon Valley hit its 3 millionth resident. It happened on May 14th. And this, ladies and gentlemen, is the 3 millionth person. His name is Maximilian. Isn't that beautiful? This is Maximilian Danner. His mom is Chinese. His dad is not. And isn't that like the perfect like the perfect Silicon Valley prototype? His mom is an artist, and his dad works in the tech industry, and they're hoping that he grows up to be an artistic technologist. That's what they're hoping. By the way, you can track Silicon Valley's population at the website, siliconvalleyindicators.org. So population pressure on our homes and on our housing markets, and you're seeing this replete. I'm gonna zip through this, but the median home price in San Mateo County is now $926,000. That's the median. In Santa Clara County, it's a little less. Now, if you go on Zillow today, which we did just this morning, they have the Zillow Home Price Index, or Home Value Index. This is all the houses out there, not just the ones that are for sale, and the median value is north of $1 million. It's 1 million plus in San Mateo County. So that's the kind of place that we live in. Astronomical housing prices. Meanwhile, the inventory of housing is declining. There is not as much house for sale. That's what we mean by this chart. Not as many houses. We're holding on to our houses longer, and that too is driving the prices up. So every year, prices go up. This is a chart that's explaining, for example, the median priced home in Silicon Valley went up by $68,000 in 2015. Well, if you are making the median income in Silicon Valley, that means that your income gain, your spike was $342 per month. But your mortgage, just to pay for that difference, that $68,000 difference, is going to claim another $319 per month out of your paycheck. So in other words, you're not keeping pace. Our salaries are not keeping pace with the price of homes in our region. So it's this untenable situation. It's not affordable. We know this. In Silicon Valley, only about 27% of first-time home buyers can afford the median-priced home. All the rest can't qualify. They can't qualify for financing. Our rental rates are through the roof. This year in Silicon Valley, your average rental rate is $2,750. That's what it costs to rent an apartment. And the average cost to rent a home is $3,500. And that represents a 33% increase over the past 3 years. So these are staggering rates. Now, here's a chart that I think is amazing. This chart shows you that in the last calendar year, we permitted 5,000 new homes. Okay? That's it. Silicon Valley issued 5,000 new permits. Remember, we had 64,000 new jobs. We permitted 5,000 new houses. This is the Regional Housing Needs Assessment numbers. These are handed out by ABAG, the Association of Bay Area Governments, at the auspices of the state. Every community is given a target that they must meet. This chart is telling you that none of our communities are meeting those targets. We're not even close, except in the luxury home division. And we are meeting our targets in that. In other words, we're adding luxury homes, but we're not adding other kinds of homes across the region. Our residents are burdened. Burdened is a technical term. Burden means that you're spending more than 35% of your income on housing, and huge shares of our population are officially burdened. And as a result, we're moving into multi-generational households, 3-generation households and more. This is happening. Now, in the minutes remaining, I want to tell you that our transportation problems are continuing to mount. And we haven't found solutions yet. That's why we're going to spend time today talking about that. Every day, this chart is telling you that about 100,000 people leave San Francisco, and they come down to jobs in Silicon Valley. This chart is also telling you that every day, close to that number, 80,000, are leaving the peninsula in Silicon Valley and going to jobs in San Francisco. Wouldn't it be great if we could just sort of figure that out, if we could trade places? And yet, we all know that's not how it works. And so all of this pressure is going on to 101, and it's going on to our transit systems. Now, our transit systems are experiencing meager growth. This chart shows you that the number of riders per capita only grew 2.4%. over the last calendar year. Our hours spent in traffic delay, are just off the charts, breaking all of the records. Public transportation isn't yet the answer that it needs to be for our region. This is striking. This is all of the units that were, this is all of the square footage that was approved for development. Remember I told you 23 million square feet? Well, guess what? 2/3 of that square footage is nowhere close to transit. Nowhere close. So these are the policy decisions that we're making across the region. If you think transportation is bad now, if you think congestion is bad now, you haven't seen anything yet, because we have a fixed amount of infrastructure, but we're not making corresponding investments with the amount of demand that we're placing on it as this economy grows, as the population grows. So these are some of the things we have to grapple with. Now, look, the index is full of indicators, hundreds of them. We hope that you'll spend time with it. And I just want to highlight a couple. Just on the fly here. We're adopting electric vehicles. 25,000 people in Silicon Valley now drive EVs. We've built over 1,000 charging units. We're making progress on our water. The previous year, we consumed per person 136 gallons a day. This year, we got that down to 116. And so we're making progress on our water goals. We're addressing the drought that way. We're using more recycled water. Isn't this interesting? Our voter turnout is low. Ladies and gentlemen, 34% of the people voted in the last national election. And our young people are not voting. That's also interesting. So lots of material in there for you to ponder and chew. It's now time for us to hear from our first keynote speaker. And as you prepare to listen to our keynote speaker, what I want you to ponder are some of the things that we just told you about our growth, our expansion, and the pressure that that's putting on our transportation system. So remember, we're having to move 100,000 people both directions every day up a narrow peninsula. Our transit ridership not growing appreciably. In fact, many of our bus providers are seeing falling ridership. The only place where we're growing is Caltrain in our rail systems, but they can't see much growth. They're maxed out until we do something about electrification and reducing those headways. And so we are going to see our traffic congestion continue to mount. In Silicon Valley, we lose 7 hours every day. 7 hours are categorized as rush hour, as when you're moving at less than 35 miles an hour. 7 hours out of the day on our major arteries. That's the kind of place we are. Now, to address that, you would have to build all kinds of capacity. And the fact is, most of us would not stand for that kind of construction. We don't want to look like this, right? We don't want to be pouring that much concrete on our landscape. And so clearly we have to be thinking differently about this problem. We have to be thinking about new ways to squeeze more efficiency out of the transportation system that we have. So that, ladies and gentlemen, concludes our briefing on the 2016 Silicon Valley Index.